Welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your StockManor Brian Johnson. Another video for you guys this week. We've had a couple of hard pushes up the last couple of days. So the bulls are doing their job. They are shoving everything back to the upside into after Apple earnings. Incredible Apple earnings. It of course went screaming upwards, $50 in one day. We saw the NASDAQ follow. We saw the rest of the indices follow as well. Doesn't always happen. The NASDAQ, of course, being the tech stock area, so you would expect good reports of Apple would lead to good reports in the NASDAQ. They would, of course, go up because of that, but it's not always true of the Dow and the SPX. In this case, it was, and they followed up very, very heavily and continued on today as the bulls really shoved things to the upside. Now, in the after hours, there was a downgrade of Spain. So currently the markets are down about 6.5 points. They got as high, though, as the 1400 mark. 1399 was the futures high in the after hours, right around that 1399 mark, and then they fell all the way to what is now about 1390. So it's been about, an 8 to 10 point move back down again, which is to be expected. We were very extended at the very end of the day, but with GDP numbers out tomorrow morning, that could make a huge difference in where we end up opening. So here we are. It could be a situation where if you follow the futures, you guys will see that we had the big run up after the close today. We even had a sizable run upwards after the close. That was followed by the downgrade that, of course, led to a huge sell-off. Now, if GDP numbers are good in the morning, guess what? We might have a huge pop to the upside. And for the people that just follow the markets on a regular basis, just the cash markets, don't pay attention to the futures, it's going to appear to them potentially tomorrow like nothing ever happened. We'll open about break even, or we'll open up even a little bit, and they won't even know all the volatility that's gone on. So you watch those GDP numbers in the morning and see if that makes any difference. Maybe nothing happens. Maybe there is a gap up. Maybe there's a gap down. Maybe this is all exasperated here with a big push to the downside if GDP numbers come out and are not good at all. So that could be something to, that's definitely what I'm watching coming into Friday. Keep in mind, Fridays typically start off the day. You do something for about the first 2.5 hours of the day, and then it typically goes absolutely flatline. Fridays are not usually all that busy. People leave about lunchtime and they just don't come back. They've either made or not made their money for the week, and they're done. So expect to see some of that action tomorrow. Now, as of what we've seen over the last couple days, here's the important things to note. 13.3 has not been breached, but we did breach this 13.130, 13.150 area, keeping the uptrend intact. No question. There's nothing broken here. There's not even anything really broken in the after hours, technically, from a bullish standpoint. There's a bit of a pullback here, but there's nothing major. The dailies all look great. I mean, this looks still very, very bullish in through here. We had the big move up, the pullback, and now another move to the upside. Still watching closely this 13.3 mark. Now, if for some reason we can get back below 12.850 or 12.700, now we have cause to concern for the uptrend and for the bulls. We could be in something that's a little bit larger correction based on what we saw back around the 14.22 mark. So if you go all the way back to where we were at 14.22 on the SPX, that would be, I'm not sure. Let's look real quick at the Dow daily. Right back here about 13,300. The first time we've touched it. If we get back below these areas here, then obviously something maybe a little bit more sinister going on, as the bears would then really take over. But as it is, looking at the daily, guys, I mean, it's hard not to be a little bit more bullish on the markets as opposed to bearish at this moment. I mean, they look really, really good right here. So breaking above this area, once again, we'll see where we open in the morning. Maybe this is just a temporary thing overnight. Down about 6 or 7 points is really not that much, and it doesn't make hardly a dent in what we saw out of the day-to-day. So keep that in mind as we roll into tomorrow. But right now, looking very good for the bulls as they push up and over this level. The next big dog, guys, 13.3, that would be huge for the bulls to get back up and hold above that area, as we've tried not once, not twice, but potentially 3 times coming into and maybe before the end of the week. So those are your levels to watch on the Dow. If you're a NASDAQ player, this thing broke some heavier overhead as well. And what would be, I think, just a bull flag. This whole move here to me looks very bullish, very bull flaggish here. So we got the break of that today into some overhead here at the 200. My bigger numbers, guys, is still about 2750. If you want to play the NASDAQ, it's long and it's long above 2750. Here's the daily showing that same type of setup here. Once again, back above 2750 is your area to watch very closely into tomorrow's trading, as this pullback has been nothing but bullish. This is just a bull flag. We broke it today, back above the 20. We'll give the bears a chance to get back below the 20 tomorrow sometime. But consecutive closes in and around this area start to once again just lend itself more towards the bullish scenario, which seems to be playing out very well. Weekly looks very strong right now. We'll let the day close tomorrow and see exactly where we're at. But as it is right now, we're definitely in place for what could be a bullish engulfing on the weeklies, just lending itself to more bullish behavior. SPX 60, nice push to the upside. Love this 1400 to 1405 as overhead. I'm really now probably extending that to this lower blue line. It's going to be sitting right around the 1410 mark maybe by the time we get up to it. So once again, watch your numbers coming into tomorrow. It's hard to gauge where we're at. After hours looks potentially bearish, but we don't know what we're going to see yet until we get those GDP numbers tomorrow and we get the open of the day. As it is, we are extended here, but that does not mean we can't go up about another 10 points and reach the underside of this line. At that point, if you're long, I would be a little bit more cautious about hanging on to the long side. And maybe at that point you want to take some profits. Maybe you want to look at a short position. However you want to play it is fine. I'm just giving you some levels to watch and watch carefully. Couple of different ways you can count this. One's bullish, one's bearish. If you're an Elliott Wave guy, you've probably seen both counts, but I'm here to tell you that it can go literally either side is strong. They both have a very strong case. After today's action, I tend to be just a bit more on the bullish stance, so I'm more neutral bullish than I am neutral bearish on this. SPX daily, same thing, back above not once, but twice now the 20-day moving average. So breaking along this line, breaking up and over that area, getting into the 1400 area looks very strong for the markets. So I still remain neutral to bullish. This little consolidation that we'd been talking about, hanging out between 1360 and 1390, was broken. So that's the big one for me. A couple of closes there show that the bulls are ready to rock and roll if it wants to get going. Here's the VIX. It dropped as well, showing or confirming the move to the upside today as we sit very well, really well contained between this 15 and 20 area. Here it is again on the weekly. Huge move to the downside. Everything still lending itself more towards that bullish scenario. As the VIX drops, the market's tend to go up, and that's exactly what we're seeing here. Huge move to the downside of almost 7% on the week, bringing us back into these lower levels of 15-ish or so, and still really no signs of major fear coming into the markets. I mean, we did see, of course, Spain was downgraded, but it didn't cause much pain in the markets. I mean, if the markets were down right now 15 or 20 points on the S&P, wow, we'd be having a different story right now. But 5 to 8 points on the S&P, it's nothing. It's nothing compared to what we did today. FAS 60-minute carrying itself up and onwards into these higher levels. I told you I loved that 104 mark. If you guys have been following my videos, you might have got that shot back above 104. That worked out beautifully. Gave you at least a buck on the trade today. We had a couple of other earlier trades, but the gap kind of killed us on the initial trade. I loved it above 100, and what we saw was a gap above it and then a retest of it. I doubt many, if any of you actually caught that. It's okay. The better way to do it is wait for it to roll up and through an area, and here it was. 104 was my baby, and that one worked out really nice today. The next one I don't think we're going to see. I don't know. I'd like to see. It might be a little bit late now to catch this thing. Let's look at it on a daily. We got back above the 20-day, and that's what I really loved about that move today. It was very confirming, if you will. Oh, going forward, I really don't know if I'm going to have a long for you here. I think I'd wait it out if you didn't catch the 104 today. I think I'd just go ahead and wait it out and see what we're going to get over the next couple days. I'll try to give you something coming into next week. The only guess here would be maybe, above 107 or 108, but even then it's a little stretch at that point. Probably not the safest trade. The 104 was the best and worked out great today. To the downside here, loved FAZ. If we could get back below this 21 mark, we did break the 21 mark. This one, of course, doesn't move nearly as far. I mean, it moves the same percentage. It doesn't necessarily move as far money-wise as the FAS does, of course, because of the difference in price. So 2.5% on 20 bucks is not what it is on 40 bucks or 60 bucks. Anyway, the point is back below 21.25, 21.20, $21. Any one of those entries was fine. They worked out, and they all worked out really, really well. Any one of them you took, you made a little bit of money on. Back below 20 bucks didn't make you, or sorry, back below $21 didn't make you a whole lot, but it would have been enough to give you at least a few profits on the day by the time things were done. Here is the daily. Once again, we break $20 on FAZ, and man, I just say, watch it closely. Just step aside at that point. Let it do what it's going to do. Let it play out the way it's going to play out. Call it good and move on. Back below $20, if you like to short, this is the one. Back below $20 is where I take that shot. I take that chance there. If we can get back above 24 or 25, that could really, really change the dynamics of things here in the financials. That would be a major, major break if we can get back above 24, 25, and that is something that you need to have set up. Put a sticky note by your desk or set an alarm to alert you if we get anywhere near that. If we can sniff 23.50, you need to get an alarm telling you, hey, watch this thing over 24, 25. That could mean a nice change of trend here in the markets if we can get this monster back up above those levels, and would make a beautiful trade. Keep that in mind as we come back to the top of the video. So it's all about GDP numbers in the morning. A little bit of a gap down overnight. We'll see if that carries any momentum at all into the evening hours. But quite honestly, GDP numbers come out decent tomorrow, we're right back up again. It'll be as though nothing ever happened for most of the market participants. You need to know that, though. It's important that you keep a pulse on the market, even in the after hours, to get a feel for how it's rolling and where it's going. Many times, especially if you're an Elliott wave type person, many times a wave, if you will finish overnight. There'll be what looks to be a little bit left in it, and you think maybe that'll come the next day, and it doesn't, because overnight it hits that overhead area on the futures market and then heads the other direction. So I see that quite a bit in my trading. And then you wake up in the morning and it's still easy to count and it's still easy to label and whatever else. But you did expect 5 more points, but you got it. It's just you didn't get it during open market hours. You got it in the after hours. Okay, so we'll see if that happens tonight. We get a pullback. Maybe it is exactly that. It's just a pullback in the markets right now, and there will be no follow through with it. GDP numbers could be the thing that really launches us one way or the other. Watch those closely. Like these videos, guys. Try out the newsletter. Do it every day. Many more lines, many more stocks, much more in the conversation itself. I go into a lot more detail about things. Really give you a lot more specifics when it comes to entries and exits. Just a really good resource. If you're a trader and you're not real comfortable doing your own work, the newsletter's great. It's not there to tell you what to do. You can take it as such, but what I'm really doing in those newsletters is just trying to offer you suggestions on where I believe the best and most conservative trades will be. If it's aggressive, I'll tell you this is an aggressive trade, be careful. If it's more conservative, I'm like, I would wait for this level. It's more conservative, I like it. Those type of trades are what's available in the newsletter. At 28 bucks a month, you get one trade to work out for you a month, and you can pay for the newsletter in and by itself. We usually do pretty well over the course of a week. Pretty conservative with my entries, so when we get into something like this week, we're doing really well. Actually, one of them that I'm following this week was AEM. I had my trade for that was over 35 or 34. Some people got in above 34. It was like 34, 34.50. Those were your aggressive entries, and 35 was your more conservative entry. And all of those worked out extremely well today. The setup's been there for quite a while. It was just about time that it broke. So Little things like, those are what I follow. I follow Apple every day. If you're a big Apple fan, you'll love the newsletter because I follow Apple every single day and talk about it because I trade it myself. Give you entries and exits and things to look for there. And then the other thing is the mentoring. If you guys really want to know, how do I draw my lines? Why do I draw my lines? When to get in, when to get out? Why are you getting in there? Why are you getting out there? If you're a question asker, if you want to know the theory behind trading and not just necessarily sit down with someone and they go, okay, do this, do that, but they never actually explain to you why they're doing what they're doing, then the mentoring is absolutely for you. That's exactly what we do. We go over whys in the mentoring. Why do we do this? Why do we do that? It's not just about, oh yeah, well you should have done this. Well, that's real easy because hindsight's 2020. Anybody can teach you that way. What I teach you is the theory behind the trading. This is why we're doing this. This is the psychology. This is what people are thinking. This is what they'll be doing at these points in the chart. If you can recognize that stuff, you're in great shape. You can help yourself out a lot. Send me an email. Talk to me about that, and we'll certainly get you going. Coming into the end of the month now. It's about time to start setting up the new schedule for the new month. And let me know if you guys are interested in that. I'll send you more information, and then we can get you started. All right, guys, you take it easy. We'll be back with you again probably early next week, next Tuesday. Bye.